I attended the first day of the LMA ICMA Africa Summit, and it's clear from what we saw today that Africa's financing conversation is really moving from raising money to building markets, not just access capital, but the architecture of capital, the standards, the transparency, the distribution, the trust, and of course the scalability and repeatability. And I think the feeling on the ground in the room and the energy in the corridors, and across the conversations is that the summit is really trying to do something bigger than just talk about deals. It's about trying to build this shared operating system for Africa's loan markets and capital markets. So you could see it in the scale. I think the amount of people attending, the mix of people, the issuers, the banks, the investors, the DFIs, the regulators, the various law firms, and again also critical people, all these critical people shaping policy and market practice. Again, not only focused on transactions. I think for me, what also stood out from day one, and if you look at it's really anchored around a few themes that are closely interconnected. And you can see that from the agenda as well. But it's really about market development and regional integration, sustainable finance and inclusion, about policies and regulatory reform as there's this enabling layer, and then mobilizing private capitals to scale to the challenges being faced. And then, of course, infrastructure and credibility as this trust engine. And again, these aren't separate conversations anymore, but really truly part of one system. The day began, I think, quite interesting, but about talking about sustainable finance and inclusion wasn't placed at the edge of the agenda. It was really positioned at the core of the lens. And one of the sessions on gender responsive sustainable finance was co-hosted by a UN woman. Wasn't framed really as a nice to have. It was framed as capital allocation problem. So, what instruments work, what incentives are missing, what policy shifts are required, and how do we scale funding into real economic outcomes. For me, what stood out was that sustainable finance is in Africa is graduating from labels to really to design. And I think it is really a sign of maturity, because markets scale when the frameworks scale, not when the market itself scales. So really good to see. I think a second key factor or theme, um, and I think one of the most useful moments was from the keynote from the IFC, um, because it put the challenge, I think, quite clear in that Africa doesn't just need more capital. We know there's enough capital, but it needs capital that can return repeatedly with confidence. And again, that also stood out for me. And this changes the emphasis, because it puts the spotlight on what does resilient debt structures look like. It's not just about pricing. What does transparency really mean? It's not just about storytelling. It's about impact. What policy reform and infrastructure is required. It's not just about your pipeline planning, but how do we build this for the long term? And of course, mobilizing capital, public and private. It's not development capital in isolation, but it's a much broader and fuller capital stack. So again, what I saw, that if you're an issuer or a lender, this framing is really a wake-up call, that the next phase isn't about who can raise, but it's about who can build trust at scale, and then ultimately mobilize. Of course, global volatility also is a strong theme that emerged. The reality around the external environment, tighter global liquidity, higher for longer rates in many markets, geopolitical fragmentation, and changing investor expectations. And I think what was important from those conversations, it didn't sound naive or overly optimistic. I think they sounded very pragmatic. And again, roughly, I think the mood was in a loose liquidity world, weak markets will meat market structures can survive, but with tighter liquidity world, only credible structures will attract repeating capital. So from that perspective, I think we saw it felt like a slight pivot from this growth narrative to a resilience narrative. Resilient issuers, documentation, benchmark, governance, and disclosure factors, which is definitely a change in sort of, let's call it, theme coming through. Um, Another factor that stood out for me from today's sessions is, I guess, in a word, collaboration. I think one of the strongest undercurrents today was this repeated emphasis on collaboration, not just purely networking, but as a market building necessity. Again, we saw that in Africa markets, fragmentation is expensive because this leads to different documentations, inconsistent disclosures, uneven regulatory regimes, unclear benchmarks, weak secondary liquidity markets, and persistent risk premium that becomes self-reinforcing. So collaboration done properly becomes infrastructure of really the institutional kind. So shared standards, alignment conventions, clear legal enforceability, market practice consistency, and ultimately much lower friction. And this is also where the Africa Continental Free Trade Area and agreement was also often referenced. And again, from our perspective as an attendee, I think what the summit is doing is something very valuable in its conveying or convening people who can align the rules of the road across loans and bonds, etc. And that alignment is really a prerequisite for scale. Um, I think another thought that came through is the insistence that loan markets and bond markets must develop together. Again, not in silos. I think this matters because, again, real market depth requires um, progression in pathways for the various issuers. So yes, it starts with bank and debt, but it moves to syndicated loans, to private credit, to local debt capital markets, and ultimately you're broadening your institutional distribution channels. And again, if those channels are disconnected, funding stays episodic and event driven and then also very expensive. But if they're connected, you build the ecosystem where capital can be recycled and scaled. And again, this is the architecture of Capital Point. I think coming through quite strongly. So from the first session, what I want to share is also two perspectives, maybe around what does all this mean, but kind of what companies can do and what investors can do. So if you're the board, if you're the CEO or exec committee, I think credibility is a financing advantage. So this means that, again, tighter reporting, better governance, clear risk articulation, and stronger treasury disciplines become important, not because investors demand it, but because execution certainty compresses the risk premium. So again, a very important factor for companies to consider. Um, I think stop thinking only about the next facility, but start thinking about the next 3 to 5 year funding path. What does that multiple instrument capital strategy look like? Investments, the various instruments, the maturities, the currency exposures, the covenant headrooms, the refinancing strategy. So year two issuers that really win, so companies that win, are those that design their capital stack proactively rather than reactively. So again, take a much longer term view and a strategic approach to funding. I think this links to this, but structure matters almost more than price. So the cheapest pricing today is not necessarily the cheapest capital over time if the structure is fragile. So resilient capital means that you've got appropriate tenors, you've got refinancing risk managed, you've got covenants aligned to reality, you've got currency and liquidity risk contained and managed, and the ability to absorb volatility without triggering distress. Um, what also came through is this focus on sustainable finance as a capability. So if you want to access certain pools of capital, you need credible targets, measurable outcomes, and governance that can stand up to scrutiny. So sustainable finance is becoming like finance. It's becoming structured, evidenced, and comparable. But again, using that to your advantage, and not just seeing it as a compliance exercise. And then, of course, relationships and ecosystems. I think market access is much more about relationships and trust than it is about a specific metric or model, especially in cross-border capital structures. So from a company perspective, these are a few, I think, views that is important to note. Now, of course, on the flip side, you have investors, you have your lenders, your investors, your capital providers. And I think from today also, what stood out for me is that if you only show up at underwriting, you're really too late. Institutions that invest in standards, in documentation quality, benchmarking, um, transitions, and market education will really shape the market and obviously benefit from that. So again, it's very much an system game. This then links also to mobilization. Again, a core competency. Scaling Africa's markets means getting better at syndications, credit enhancements, risk sharing, blended funding structures, and distributions designed that fit the institutional mandates. We touched on this already, but I think transparency and comparability is key again for the investor as well. Transparency isn't moral, but it's mechanical. It is what enables pricing, liquidity, and repeat participation. Also, a good way to build trust. Um, and then, I guess, a sort of a closing thought that stood out for me is the Africa opportunity is increasingly corridor based and cross border. Um, so think regionally, not just domestically. Capital strategies need to reflect your regional flows, not just a single country specific risk. So a very interesting first day for this inaugural conference. And again, I think a very serious attempt to shift the conversation from transactions to systems. Um, yeah, that really felt like this conference with Day1 is the step in the right direction of building those standards, building the trust, and building the mechanisms that allow capital to return and repeatedly return with confidence. And again, if companies can upgrade their financing readiness and credibilities, and lenders can help build this ecosystem, not just price, the future definitely does look bright. Yeah, a long day, but I'll be dipping into this again tomorrow for some of the day before I unfortunately have to do a few meetings. But I'll do a short summary again about what stands out from tomorrow morning sessions. Thank you for listening.